Hi, Miss Flo and friends. My name is Fikri Rabbani with student ID number 55142. I'm from Accounting Department in Multimedia Nusantara University 2020. Today we are going to talk about accounting cycle. This is my key presentation. First, what is accounting cycle? Second, what is the purpose of the accounting cycle? Third, steps in the accounting cycle. And last is the conclusion. What is accounting cycle? Accounting cycle is a collective process of identifying, analyzing, and recording the accounting event of a company. It is standard at steps process that begins when a transaction occurs and ends with its inclusion in the financial statement. Second, what is the purpose of making the accounting cycle? The main purpose of the accounting cycle is to record all the transactions systematically without missing an entry. It leads to the accuracy of all financial records that accountant prepare the financial statement considering accounting record and cycle. There are 8 steps to the accounting cycle. The first step is identify your transaction. Next, record your transactions. Next, post it to general ledger. Next, make an adjusted trial balance. Next, adjusting your entries. Next, create your adjusting trial balance. Next step is create your financial statement. And the last one is closing your book. First one is identify transaction. An organization begins its accounting cycle with the identification of those transactions that comprise a bookkeeping event. This could be a sale, refund, payment to a vendor, and so on. Next is record transaction in a journal. Next come recording of transaction using journal entries. The entries are based on the receipt of an invoice, recognition of sale, or completion of the other economic event. Third step is posting the general ledger. Once a transaction is recorded as a journal entries, it should post to an account in the general ledger. The general ledger provides a breakdown of all accounting activities by account. Next is an adjusted trial balance. After the company posts journal entries to individual general ledger account, an adjusted trial balance is prepared. The trial balance ensures the total debit and equal the total credit in the financial records. Next is adjusting entries. Analyzing worksheets and identifying adjusting entries make up the fifth step in the cycle. A worksheet is created and used to ensure that debit and credit are equal. If they are different, then adjustment will need to be made. Next is adjusting journal entries. At the end of the period, adjusting entries are made. These are the result of correction made on the worksheets and the result from the passage of time. For example, an adjusting entries may occur interest revenue that has been earned based on the passage of time. Next is financial statement. Upon posting of adjusting entries, the company prepared an adjusted trial balance followed by the actual formalized financial statement. And the last step is closing the book. An entity finalized temporary account, revenue, and expense at the end of the period using closing entries. These closing entries include transferring net income to retained earnings. Finally, a company prepares the post-closing trial balance to ensure debit and credit are matched and the cycle can begin anew. Next is conclusion. In conclusion, making a report according to the flow of the accounting cycle has a positive impact because it allows the company to know the financial condition of the business accurately. You can find out every type of transaction, whether it is related to sale or purchase in the business you are currently in. Okay, I think that's all about my presentation. I would like to finish up by saying thank you and your time and attention. I hope what I have shared will be beneficial for all of us. Bye.